So
Yeah.
today we're here and the topic is, are you covered? And what I'm talking about here is insurance, protecting your assets, right?
That's right.
That's what insurance is for. And it's complicated. And it's one of those things you just want to shove under the rug. You don't want to take time to call and take care of the details. It's not the most sexy topic, but boy, when something happens, you better have it taken care of. So we're going to talk about that today, and you'll be able to ask questions. So I'll get started, and I just want to say welcome to LeAnn Riley's Real Estate Investing Club. And it's exciting. I already can see I got some people from not the local area, from out of state. And I love that because, well, insurance is everywhere. And I know State Farm is everywhere, right?
Yep. 50 states.
So all 50 states, doesn't matter where you live, these rules apply, and particularly to rental property or your own personal property. And even if you're a renter, you need to know about insurance. It's
That's right.
everywhere. We all have cars we have to insure. So I broadcast these live streams I've been doing weekly during COVID-19, and I bring in expert speakers that are leaders in real estate investing and other important topics. And what's cool is you get to ask questions. It's a lot different than a podcast. Right here in the moment, if you have a question, you get to ask it. So I'll give you the directions for that in a minute. And the truth is, you don't need a ton of money or knowledge to get started as a real estate investor. You just need to know the right formulas, and you need to follow a system to be a smart investor. So I'm LeAnn Riley, and I'm a broker and a real estate coach. And I help clients buy, sell, and invest. And I lead the Encore investment team of realtors here in the Twin Cities, Minnesota. And I built a multi-million-dollar portfolio in residential, multifamily, some condo development, commercial, and vacation properties. Don't we all wish, right? Right now. So I'm a national coach and trainer, and I help ambitious people build wealth as real estate investors with my proven profit formula coaching program. And along with that, I provide free education just like this, because we all have to stay up to date. The real estate market is continually moving. Add COVID-19 and how much businesses are changing, we have to keep up to date. And I'm sure insurance is moving along too. And we need to make sure we're covered, just like I said. It's made a difference for me being sure I'm covered, because I've had my share of insurance claims over time, and most people do. I bet Kim knows. So I'm glad you're here. And today our guest is Kimberly Nybo of State Farm Insurance. So hi, Kim.
Hi, how are you?
Great. And I'm going to tell you a little bit about her. She is an expert. I'm telling you, this lady knows the ins and outs of insurance. She's been doing it for over 31 years. And she has offices in Minnesota, a couple of them, and she's licensed in several states because as her clients grew, she grew with them, so she got licenses in some other states. And here's what I love, she's owned, rehabbed, and managed 40 plus rental units over the last 30 years, along with her insurance business. So she gets it about the real estate and being covered, along with having this insurance business. She knows how to build passive income, right?
That's right.
That's right. And she's about educating you so that you can really make some smart insurance decisions to protect yourself, your family, and your business investments. And I love too that I can call Kim with a question, and she is just a resource of knowledge. So I'm going to ask you about some of these. She's got all these letters after her name, you guys. The LUTCF, what's that?
Life Underwriting Training Council Fellow. So it's a extensive training in all different types of insurance. It's just more of honing your skills, right? Sharpening your blade. What we
So
do to get better.
you don't just do property insurance, you do life insurance.
Sell 102 products. So birth to
Wow.
death, from investments to life, disability. I am a mortgage lender. We do checking, savings, vehicle loans, mortgages, home equity lines of credit. We do everything. So I'm
I didn't
mortgage
know it.
licensed, I'm securities licensed, yep,
I didn't know.
real estate
Well,
licensed. Yeah,
she's got a real estate license too.
yeah.
You must do a lot of continuing ed, boy. Oh
I
boy.
do a lot of continuing.
Now, what's a NAFA board member? What's that?
National Association of Insurance and Financial Advisors. So I sit on a national board and a state board. It's protecting our insurance industry. And I'll go down to the Capitol a lot, and I'll go to Washington, D.C. a lot, talk to our senators and House of Representatives about insurance things that are maybe could attack the industry, things that are not good, that are slipped into bills 1,000 pages in. And so I'm very active in that part of it, making sure the industry is healthy and safe, both for the consumer and for us agents.
That's cool, because when you're involved at that level, you kind of are ahead of what's coming.
Yes.
Yeah.
Yeah, you can't bury your head in the sand, because then when you lose your paycheck or the industry crumbles and you wonder what happened, well, maybe you should have gotten involved.
Yeah.
Yeah.
Now it says you're an EBC attender. What's that?
That's my church, Eaglebrook Church.
Oh, okay. Okay.
Yeah.
And you're on the Metro North Chamber board.
I am. I also take an active role in the Anoka County, making sure I know what's going on with economic development, what's happening with small business. I think it's really important to know what's going on in your environment, what that looks like, and are there laws changing, and is there grant money and things. So it's really important to give back, and to you got to be involved. Otherwise, you're no good in this industry. So you have to know.
That is really great. And your office is in Anoka County, the one you're sitting in right now. And where's the other office?
That's in Hennepin County. It's down by the University of Minnesota by TCF Bank Stadium.
Ah, okay. I got two more things on here. Ambassador Travel Qualifier. What's that?
That's travel for life insurance production at a very high level for State Farm out of 19,100 agents. So.
Wow.
We've done that every year.
You must be a dog lover, right?
Yeah.
Pause. What's Pause for Pause?
Pause. That's another charity that I'm involved in. And we help bring, dogs and help shelters. We raise money to help shelters who are struggling, that need help with taking in strays and rescue dogs and things like that. So I do quite a bit with that, raising money for them. And Sake of Food Shelf, I do a lot with the food shelf here in Anoka County to make sure that there's food for people that don't have anything or aren't as blessed to have as much, need to feed their families. So I take care of that also. Yeah.
Cool. Yeah. Okay, you guys, I've known Kim for 20 years and maybe more. And
I think more, actually.
You know what? She's worked with me through the building of my portfolio back in the 90s. And the unhinging of that portfolio through the bad divorce. She's laughing because unhinging or liquidating real estate isn't easy either. No. And there's things you have to know around the insurance and how it's all working as you unravel also. And she worked with me all the way through that liquidation. And, shit happens, and it did.
Yeah, it does.
A few logistics here, you guys. The chat box is how you're going to ask your questions. Okay, so I'm going to lead us in a bunch of questions, but if something comes up when Kim's talking, you can put your question over there in the chat box. Okay, so let's get started. Okay, and we're going to try to answer all your questions, but let me hit a few. I'm going to put up a poll first. We want to see who's here and who's listening, okay? So here comes the poll. It's pretty easy. It just shows up right there. And what you do here is you just make a vote. Are you just getting started in real estate? This is asking, where are you? Are you a fix and flipper? Can you guys see the poll? I don't see anybody voting. A lot of people there. Somebody's a buy and holder. Yep. Okay, good. They can see it. They're voting. Now we can see a little bit about who we're talking to. Okay, we got some fix and flippers, some getting started people, and buy and hold. So that's good to know who we're talking to, right? Let me see here. One's off my screen. I can't see that bottom one. All right, I'm going to end this, and fix and flip is the winner here, you guys. I'm going to share the results. Can you see them? So fix and flip. Great. Okay, now how do I get this off? Stop. There we go. Okay, we good? Now you can see us both again. All right, I'm going to ask her some questions here. The big one, Kim. What about COVID? Is there anything that insurance can provide for us? I mean, we're getting stimulus package and all that. What do we need to know about our insurance?
There isn't a lot right now. COVID's a new thing. You know, AIDS was a new thing years ago. COVID's a new thing. I mean, we couldn't have made up COVID 20 years ago to put it into an insurance policy. It's something new we're learning about. Is it up for discussion at the House and legislation? Yeah. I mean, you know, because of people not being able to pay their rent and landlords struggling, right? Because the mortgage man calls every month whether the tenants pay their rent or not and what that looks like. And if somebody gets COVID in your apartment and then you've got to fumigate, what does that look like? Can you re-rent it? I mean, there's all these topics occurring. And this is all brand new stuff. These are all brand new problems, concerns that now the insurance industry has to take a look at. Nothing we could have anticipated for, because it is a pandemic, but it is catastrophic pandemic, but it isn't a peril listed in your policy. It's not like a tornado. It's not like a wind hail damage. It's not some of those kinds of things. So this is completely unique and different. And now it's something we're going to have to look at in the insurance industry.
So it's not, you're just like any business right now. We don't have the answer. You don't know what,
No.
And you can't, obviously, a landlord can't just file an insurance claim because their tenant isn't paying the rent. That doesn't work that way.
No, it doesn't. Unfortunately,
yeah.
No. It's kind of like maintenance wear and tear. It's like people try to put an insurance claim in for a maintenance wear and tear issue, and I tell my clients, you have to take care of your property. It's your most expensive possession you have, and people think that insurance is for a service and maintenance issues. It's not. They think, well, that pipe's been leaking for a really long time. Well, you should have fixed the pipe 4 months ago before it had all this other damage, things like that. So it's just really important that, some of this stuff has to be taken care of, and some of it, COVID was never anticipated, right? It's something we're going to have to all deal with together and then come out of it. And hopefully with the vaccine, we'll never have to deal with it again, like polio and, like measles, mumps, and rubella, but we'll see, how that looks. But it's taken us by surprise, and it's been financially devastating.
Oh yeah, to all people. So yes. I saw a TV commercial where State Farm is giving money back to people. Like I just saw it the other night, like on their auto policies or something. What's that about?
Yeah, so we are giving back $2.2 billion, and we're giving it back from March 21st through May 31st, or March 22nd through May 31st. And we're giving back 22.5% of all premiums paid in on auto policies. Could be motorcycles, but auto policies. And you don't have to be with us the whole time, and you can actually come to us right now and still get in on the 22.5% of the days you're with us with State Farm. And it's the largest payback of any insurance company. We are the largest insurance company in the world, and we're mutually owned by our insureds. We are not publicly traded on a stock exchange, so we don't have to have a huge profit margin to make fat cats rich. We are just taking care of our customers, one customer at a time. So that's uniquely different. Secondly, then we're looking now at what you're going to see on the news and TV is we're looking at a second rate decrease in auto and push premiums coming up here in September. So the first wave of credits on premiums on your bills will start. That wave starts June 14th. And then when that wave runs through June, July, when everybody then knows I'll cycle out of that credit, then come August, September, we filed with the state already to give another percentage off. Everybody's going to see a decrease in their auto premiums. And that's coming through as a second wave. So it's pretty cool. We're going to be giving back lots and lots of money over time, which is really cool.
Will that make you more competitive? So we better like shop our auto insurance?
Yeah, we're competitive now. We've taken 4 rate decreases in the last 12 months, you guys.
Really?
We're really competitive. Yeah. And we're going to be taking more. So we can move faster than some of these publicly traded companies. And when we look at, making profit, remember, nobody's driving. So
I know.
Mileage is lower, no accidents. People are home taking care of repairs on their homes. So there's less likely to have problems. They're actually fixing their homes right now. So there's less likely. And we haven't had a lot of storms. We haven't had a lot of storm damage right now. Keep our fingers crossed. May is usually a big storm month, and we haven't had a lot of storms. So there's just been lots going on with really being able to position ourselves for rate decreases with insurance.
That's cool.
Yeah.
That's very cool.
Yeah.
Okay. And how does bad economic times, recession or whatever you want to call it, depression, how does that affect the insurance rates?
It really doesn't. I mean, a rate is a rate. I mean, we look at how many claims by zip code and the severity of the claims, the frequency of the claims. And we look at it as a whole, by zip code, and we call them zones. And then we have to price accordingly. So, if a section of Minneapolis has a ton of car thefts, that's going to make where you live in that area of Minneapolis, your comp is going to go higher in that area because there's a lot more car thefts there. And theft and vandalism is under a comp. That's where your comp coverage comes in. So that would be higher. Just like Blaine has been hit. I've literally had people get their roofs on a home and literally the next day call me and they've been hit again and their roof is completely totaled again. So if you're in certain corridors of Blaine, which has been hit a couple times, that is going to raise your rates out there to have a home policy because they seem to be getting pummeled time and time again with wind, hail, and all kinds of stuff.
That's interesting. So, gosh, when you're shopping for a home, you don't think about that. What's the insurance rate going to be? You think it's on square footage and whatever, but it's on what's happening in the area. And if they had a tornado last year, your rates are going to be higher.
They are going to be higher. Yep.
And interesting thing about the car, you're right, where you live and the car is. Yeah.
They're so smart now. I mean, they can demographically pinpoint everything that's going on in an area. Yep.
Interesting. Yep. One of the things about Kim, because I had a lot of buildings insured by Kim, and, she goes above and beyond the call of duty in the way that she services her clients. And I've sent a lot of people there who were confused or maybe unsure of what to do around insurance, because I like working with and referring people who get it, have been around long enough, and they, like a real estate agent, she's seen it all. She's heard of the weird claims, in her day. And it's a great day when you have a happy homeowner close on their investment property, but darn it, they better have the right insurance or it won't be so happy if something happens.
That's true.
So what about, one of the things Kim taught me is I owned a commercial building over on Lake Street, and she taught me that you always got to have loss of rent insurance, because what if something happened to the building and then I couldn't have those tenants paying the rent? I still owe the mortgage payment. So explain to us that loss of rent thing.
That's exactly right. So if you had tornado, fire, happens a lot. You just saw that on the news all the time. You'll see apartment building, apartment will set a unit on fire, but then there's smoke damage, and then the fireman comes in and they cause more water damage trying to put the fire out. And it's not just that apartment building or apartment, it could be the two next to it, the one below, because water travels downward, right? When the firemen come. And so it could wipe out 4, 5, 6 different units. for one little kitchen fire. And so it's really important. Now those people have to leave. Well, you can't collect rent on something you're not giving them a place to live for. Now you have loss of rents for the time that is being put back together, right? Getting it back to the way it was prior to the loss. So that's why loss of rents is so important, so that you don't have to financially burden yourself with all that kind of thing, right?
It was really, in my case, you know, it was $1 million fix on that fire that my commercial building had, and it took almost a year. The loss of rent didn't quite cover that, but boy, without it, I would have been down.
Yeah, well, and thing I find today is everybody wants a really cheap price, and they really don't want to pay a lot for their building. Maybe they got a really good buy on it, okay? But what they don't realize is if you have a fire, now I got to bring it up to building codes of today, right?
Yes.
Not 2x4 construction, 2x6 construction. Now everything's got to be sprinklered. Maybe you got grandfathered in, you bought that building, it wasn't sprinklered. Well, now you have a fire, guess what? Now they're going to want maybe sprinkler system. Maybe you're not disability accessible. Now the building burned, guess what? Now we got to be disability accessible. Things got to change. There's so many changes. So people don't realize that, yep, your replacement costs may come in a lot higher to rebuild than what you bought it for. But keep in mind, I've never once had a client say I gave them too much insurance during a fire. Okay?
Yeah.
Just like a death check. I've never had anybody say, oh, that's way too much death benefit you gave me for the death of my husband. You know, I've never had, they've always wished they had more. So you got to remember on a fire or a total loss of like wind, hail, or whatever, a tornado, we got to haul the stuff away. So you got to, you know, you got debris removal and ordinances, you know, law that has to take effect. And then we have to get the soil ready to rebuild again, right? And get everything ready to rock and roll. So there's a lot of expenses that go in that people don't realize. So when they say they want just cheap coverage, you know, give me the very cheapest, it's not always the best. They got to be careful of that.
Well, and I think there's sort of fair market value, and then there's replacement value. That's two different animals, right?
Yeah, of course we get a better buy when we buy, you know, wholesale as opposed to building, which is retail. I mean, that's just common in everything, right? So I've always bought a used house and fixed it up because I can get a better value and I get more bang for my buck as opposed to building brand new, right? Costs a lot of money to build a new house or a new building or whatever today, you know.
So let's say you pay $300,000 for the house.
Yep.
You actually might need to cover it for $340,000, $350,000, whatever.
Maybe 400. I don't know if you got a great deal. Land is always constant.
Yeah.
But the building itself, you know, is very expensive, and depending on what it has in it. And again, what building codes are today, and every county is different. Some counties are really sticklers, you know, compared to other counties. So it's a lot to that.
What about that? I've heard, I used to own inner city older houses, and they would say it was grandfathered in.
Yeah. Okay.
Okay. In the, like if you had a duplex, it could be a duplex, but you can't now you can with the 2040 code in Minneapolis, but I couldn't rebuild a duplex, right? That's what grandfathered means, right?
Yep. So you're grandfathered in. That would be like, you know, not having, maybe you're not disability accessible, right? Or you don't have sprinklers or whatever. All those old codes are grandfathered in because you're existing.
Okay.
But if that home was to burn to the ground, guess what? You're not grandfathered in anymore. Now you're going to bring it back to the way it was prior, but with all the new building codes. The other thing you want to watch for is a lot of companies will not bring the home back to the way it was prior with the big moldings and the big covings and all that special stuff. Most policies are written today that they only have to put in very basic structure, sheetrock, nothing fancy in the covings, just your regular baseboards and doors. So you have to be careful on those policies because most of them will not warranty giving you back all that great craftsmanship that you had in those old buildings prior.
So you need extra replacement value for that.
That and some of the policies themselves will say they won't bring it back that way. They're going to bring it back to basic construction, will say right in the policy. They won't give you back built-in cabinets and all the other great cubbies and things that you get.
You have to read the fine print, or you have to know to ask your insurance agent exactly about that.
Right.
So now I'm going to go over to the auto. Like, so what happens after a DUI now? Do you get a big nick on your, and all of a sudden the rates go up, or what happens?
Yeah, if they need an SR22, which is most states now require an SR22, which means you're gonna probably have to breathe into breathalyze yourself before the car turns on. That means you're gonna need an SR22, and SR22 means that you're gonna go risk insurance. And in the state today, you get 2 DUIs in 10 years, you're in big trouble. Now
Really?
they have a zero tolerance. The other thing is, which I just found out from a client of mine, that if your level is high enough where it's double what the normal limit is, they will actually prosecute you as if you have 2 DUIs.
Oh, ooh.
Yeah.
Wow. And you could pay for that insurance-wise for years, right?
5 years.
5 years.
Just like not having any insurance and getting stopped. That's a 5-year violation. That's like a DUI, because it's the law that you have insurance on your vehicle. So if you don't have insurance and you get stopped, it's going to cost you a lot of money. Get your checkbook out.
Yeah. And see, people don't think of that.
No.
Now, let's say you got the DUI. Does that affect your property insurance rates too? Like,
Nope.
are you, okay.
Nope.
All
Nope,
right.
we're
They're
okay with
separate.
that.
Okay.
Separate. Yep.
I was curious.
Nope. No.
Okay.
No to that.
If you own rental property, is that going to be a higher rate than my home? Because it's a rental?
It could be, yes, because you're not living there. So if you have a duplex and you live in half and you rent half, it's actually quite good rate, because you live on premise, right? And you're watching it, you're the owner, that kind of thing. If you're just a landlord and it's all a rental dwelling, of course you're off premise, and you have all these other people that don't really care as much as you do about your property, right? And so there's some exposure there. And there's a lot of exposure there liability-wise, because usually your tenants have people over, friends over. And if, say, your sidewalk isn't shoveled or it is salted and they slip and fall, get your checkbook out and you're going to be paying some money. And so I recommend you have no less than 10,000 med pay on your rental dwelling policies, because if you can at least cover their health insurance, they're not as likely to sue. But then secondly, don't have less than $1 million coverage right on the homeowner's policy itself. And then make sure you have an umbrella both personally and professionally. So you have a personal umbrella to protect your personal assets, but then you need a commercial umbrella too to protect you commercially. So whether you're in an LLC, a partnership, an S corp, however it works, you got to have both. So don't think that the personal umbrella is just going to automatically kick in. You don't want that to get to the point where it has to go after you personally.
Yeah, boy, you taught me that too about the umbrellas. Yeah, they're
very, very
important
important
because
policy.
it's really hard to get every little detail sometimes, and the umbrella helps if you.
Umbrella pays your attorney fees. Attorneys are what, $300 to $600 an hour. So if you get sued, you want to get your checkbook out for the attorney fees, or would you like State Farm to represent you and pay your attorney's fees? Well, that's what an umbrella does. So it's really, it's a really important thing, and it's very, very cheap, reasonable.
I know it is cheap.
Yeah, we're the cheapest in the business for umbrella policies. Sometimes we're a half or a third the cost of other companies. Yeah.
And so let's say we do have a fire at our house or the roof in a tornado, then our rates are going up.
That's a catastrophic loss. So an act of God, really, you can't prevent that. But your tenant sets the building on fire. Yep, you're going to have that as a chargeable loss. You bet. Theft, burglary, vandalism, those are all things that are not an act of God, right? So they're weighed differently. Third thing is like LeAnn and I were talking about earlier, people who put claims in, or you call an insurance company and you put a claim in and nothing's paid out. It goes off of frequency and severity. So zero paid out is just as bad as a $20,000 claim paid out. And what goes on today in the industry is a lot of insurance agents don't educate you and talk you through whether you should put the claim in or not and what that ramification looks like. But secondly, they put the claim in, want you to get a zero payout because you lose your claim rating discount and you can't shop. That means you can't go anywhere. So they're going to raise your rates and they get you as a client longer so they can make more money off of you. So it's really important you partner with somebody that you can have really good conversations with, and call before you make any decisions, and get bids first, talk you off the wall a little bit, get your bids first. Let's see where you're at. Because a lot of times I'll get a client call me and they'll say, oh, it's just the most tragic thing ever. By the time we get them calmed down and the next day and we start getting some prices, it wasn't that big a deal. So then they're like, oh, thank God you answered the phone and I could talk to you about it. We could walk through it and things like that. So the idea behind it is we really need to work together as a team. Because if you're going to go off and buy other properties, that claim on that one property is going to hurt you for future properties. So it follows you. I have a client who has investment properties in Florida, and he came to Minnesota. He had a partnership down there, and the partner filed a claim on their rental property down there. He moved to Minnesota. He came here to buy policy, and the claim was on his record. He goes, I didn't file that claim. Well, were you in a partnership down in Florida? Yep, I was. Well, they filed a claim, and it hurt you too because you were on the partnership. So this stuff follows you around with a clue report, and it hurts when you buy other properties. So you want to be able to get your very best rate, especially when you're going to be accumulating properties, right? Building your portfolio, so you can position yourself for the best prices possible and the best policies.
Definitely. And someone asked a question, does having the umbrella for business and personal mean if something happens at a rental, they couldn't go after things that aren't under my personal name, only LLC stuff?
So it helps remove your exposure. Now, you could get an attorney to maybe try and pierce the corporate veil. Okay, so if you're commingling money in between, like you took some money out of your LLC over to your personal account and you're commingling back and forth for repairs and things like that, then they may be able to, attorney may be able to argue that they can see a path there, right? Between your corporation and your personal, and you're doing it consistently, right? Where then they can say, well, we're going to pierce the corporate veil because really in actuality, you aren't really a true corporation. But for most practical purposes, if you've got that LLC and that has an LLC commercial umbrella, that would in most incidents stop you from being sued personally. That's the idea behind it. We want to, my biggest thing for my clients is for me is to cover their butt personally. If they're in the rental game, my job is to cover their butt personally, so that they're not being, gone after and they're losing everything they worked their butt off their whole life for. And people who are cheap or buy poor products, those are the ones that are a huge target. And they get their butt handed to them all the time.
Yeah, it can happen in a second, an auto accident or something. I mean, my sister got hit by a car. It happened in a second. Yeah, who would know?
Yeah, well, a college student comes home from college, parents are out of town, right? Parents are traveling, don't even know this college student's coming home for the weekend. College student comes home for the weekend, takes the car, hits two professionals, hits them so hard, knocks the rings off, or whatever. They're paralyzed, the other one's got brain damage. Guess what? Parents are on the hook for that. They're on the hook for the whole thing.
Why? Because they were staying at their house?
Because she's a daughter, and she came home and took their car. And guess what? You borrow your car to a friend, you're on the hook if they do something wrong. So, your liability exposure is very, very, very far reaching. And that's what I try to tell my clients.
I know. I won a BMW. You know that. I won the BMW. Yeah. And my son wanted to drive it, but I knew, no driving it. Just me, because I don't want to be liable.
Just had a client say that the guy was helping him on the basement, just happened this week, helping him on the basement repair. A friend of the family. He borrowed their truck. He hit and ran somebody last night on the highway. Took off and returned the truck and didn't tell him. Police are calling this morning saying, we got to talk. Your car was involved in a hit and run last night. Yep.
Gal, see?
Yeah.
And they figured it out. So how many claims can someone have? Like, do you kick people off after, what if two buildings had tornado and then another one had a fire and another, it could happen.
It can happen. A lot of bad luck happens. The biggest thing with us is longevity. How long have you been with us? what does your loss history look like? How much premium you've paid in over time? An agent has a lot to do with it if they can fight for you. If you're filing frivolous claims, then probably, because you're with some agent that doesn't care, or doesn't want to educate, or has inexperienced team members working there, that's a whole other deal. Can't help you on that. So it's just really important that you get a partnership with whoever you're going to do business with insurance. I can't tell you how important that is, being in the rental business.
I love what you said. You have to have an agent who can fight for you, because
Yep.
like you said, the adjusters or whoever they're presenting it to, if they can present it in a way, then you can keep going. If they can't, you're out.
Well, and not every claims adjuster is perfect, right? And so maybe there's things that, one in 1,000 claims goes bad or whatever, where maybe it just, was a roofing issue. You got to pick a good roofer. You got to pick reputable people. And once you pick it, I can't help you. So if you pick an unreputable vendor and they do shoddy work for you, there's nothing I can do for you. So it's better we pick the right person off the bat than the cheapest guy who didn't put ice and water shield down. And now you got ice dams and everything's backing up and your shingles are falling off your roof and all these other things are happening for improper installation. Or they did put your roof on in the winter and now your tabs don't adhere, because there's no heat, right? And pretty soon that adhesive that sits on there got too old, and come May, June, July, when it does get hot, they're not sticking because they're not adhesive, because they got put on, too late in the year. So there's a lot of things like that I can't help, but we can help talk about getting the right people to do the right job for you the first time around.
Do you, let's say my roof blew off, do you refer somebody for me?
I have people we can refer if you want us to help you navigate it, but you got freedom of choice to go with whoever you want.
I know,
but I recommend you you talk to 2-3 people.
Yeah.
And we look at 2-3 different bids and see where we're at, what that looks like. And, check Better Business Bureau and there's a lot of things to check, because a lot of these companies are here only for a storm and they leave and you'll never find them again. They don't warranty the roof. They won't come back. They've done improper installation and you're on the hook. And the insurance company won't cover a second roof for improper installation, shoddy workmanship, and things like that. So it happens all the time. I had one client who lost their home. Was during this tornado that went through North Minneapolis, and they hired a guy that came through the town, and they needed all this work done to their house, and he didn't finish the work, so they didn't finish paying him. Well, he had put a lien on the property, rightfully. They all do when they start the work. That it went all, and even though he didn't finish the work and the work he had done was shoddy, you know what? He took their house.
That's so sad. Yeah.
It's sad. And so these are kind of things that really, truly do happen.
They do.
Yeah. Yep.
So now I know somebody called me today and they wanted to know, they live in a townhome.
Yep.
Okay.
Mm-hmm.
And a new front sidewalk sort of thing was installed, but then there's some new leaking in the basement. They think it's foundation because it's fine. They found out that the people before they bought it, there was a foundation leak that was fundamental and it had to be replaced, and the place, someone had redone the whole place.
So you got a warranty issue there. If there was work done prior to them purchasing the place, there's going to be some warranty there if there was foundational work done, if it's now leaking. And secondly, it should have been disclosed, right, when they purchased the house.
I think it was disclosed.
And then thirdly, leaky basements are not a covered claim unless you have a sump pump. Okay, so if you have a sump pump, if there's a sump pump and the sump pump stopped working, power outage, it was just overwhelmed by too much water coming in and it couldn't keep up, and then the basement leaked, and if you have sewer backup on the policy, then you're covered. But just a regular leaky basement is not a covered claim. So those are not covered just because your basement leaked because we had a fast thaw or we had torrential downpours or things like that. Yep. They're not a covered claim. And then when you're in a townhome association, you got to go off of what your bylaws state and what your master policy is. Are you from the studs in? Are you from the sheetrock in? Are you from the, some of them now today are right from the siding. They're all covered. Some cover, your built-ins, some don't, things like that. So really the homeowners association bylaws really jurisdict how coverage is done and how it's given according to then whatever that HOA policy is.
I know this because I serve on the maintenance committee, but like mine right here, my HOA, if there's an ice dam, there's this 2-story roof thing back by my garage, that's my responsibility, that roof.
Okay.
If there's an ice dam up there,
right?
Like I can't even get there. I'm going to have to put those heat strips up there. I didn't know it's my deal.
Yeah. So you need to really pay attention. The other thing you need to pay attention to is if you got a HO6, which is condo unit owners policy, right? If that's for townhomes that are an association or condos, you better be sure that your loss assessment equals your deductible.
Yes.
Secondly, if business property, you better be sure that equals your deductible or more. And you better be sure you have property coverage enough, depending on what your bylaws state. When you tip that place upside down, everything that falls out becomes personal property. So if you don't have a built-in range and it falls out, it's your personal property, whether your bylaws state, something different because it's not built in anymore. Or if you remodeled, you put upgrade. I mean, there's a lot of things that go in that we need to pay better attention to where people are getting burned.
They don't teach people about who buy condos, like how to buy the right insurance. It's kind of sort of done at the closing, like a quickie thing. Yeah. And the client, I've been trained, so I know that about the master policy and things like that. But boy, the average consumer knows nothing about that. So you better have a good insurance.
Nobody should have less than 10,000 med pay, period. End of story. I don't care if you have a personal residential, a condo unit policy, you're a landlord or you're a landlord of an apartment building, whatever, no less than 10 grand. Really, I see so much $1,000 and $5,000 med pays, it makes me sick. Medical costs are through the roof and attorneys are waiting to sue. So the higher your med pay, I even do a lot of 25,000 on big apartment buildings or, multi-family type things. You need to take a look at that. It's so cheap and it stops people from suing you. It's just a mandatory thing for me.
I want to share with you guys too. One time, this is way back, I owned a property. I don't know if you were my insurance company. I can't even remember. It was way back, my very first property, in fact, triplex. And this tenant lived there a whole year, and we started fighting about halfway through. And in the end, she filed a lawsuit against me for the whole year's rent. She claimed her newborn baby had asthma because the gas stove leaked.
It happened.
And I was like, what? And I, court and this and that. And then I think my insurance, maybe it was you. I don't know if you remember this one. My insurance actually covered it, fought her off and whatever. And as a landlord, I thought, oh my God, how do I handle this?
Yeah, no, that would be, we would submit that to claims and they would take a look at it on the liability standpoint piece. And, what does that look like? And, are you negligent? Did she tell you? I mean, there's a lot of variables that go into
exactly.
it.
And that is what happened.
Where, insurance can cover your butt or help you.
Well, and that was the biggest relief ever for me because here's someone accusing me of something that clearly didn't happen.
Right. Yep.
And I was like, oh boy, where do you go? I wanted to hide, but then I was like, oh, thank God, my insurance, they're going to talk to them and figure it all out.
Yeah. Well, I think too, I know we don't have much time left, you guys, but a couple things. When you're shopping for insurance, make sure you don't have co-insurance. It's very prevalent lately is co-insurance. You do not want a policy that has co-insurance.
What is it?
Co-insurance is, I just had a client I wrote and I asked him, I said, is there a reason why you're self-insuring for $350,000? He goes, no, I'm not. I have a $2,500 deductible. And I said, you've got that plus. You got $50,000 on business property, another $350,000 for building structure minimum if you have a fire, a storm damage, or a claim. He goes, no, I don't. And I said, here, let me show you in the policy. It's becoming very common practice in the industry today for people, independent agents, to do co-insurance. The reason is they can try and sell you a policy at less money, but little do you know, you will be financially wiped out on a claim. So it's really important you pay attention to that. Second, cost versus price, right? So you pay now or you pay later. So I told him, for $200 more a month right now, the same guy, I will give you a $250 deductible. That's it. And when you have a claim, it won't cost you $350,000 plus at loss time, right? Cost versus price, right? Pay now or pay later. So it's really important to weigh those factors when you're getting policies, that you're covered properly. And even if you can afford $350,000, do you want to part with your hard-earned money when it's something as simple as just you didn't pay attention to what really was you were getting because you trusted some guy who says, oh, this is the best policy in the industry? They're lying. It wasn't the best. So I just want to talk about that. The other thing is making sure in your leases that everybody has, that you require all your tenants to have renter's insurance to spread your risk. So if they set something on fire, or they do let the toilet run over, or something like that, that there's coverage so that you guys aren't on the hook for that. Because remember how I said claims has an impact on you guys buying more properties and keeping prices down in your premiums for cost containment. If you make them all have their own tenant renter's policy and you are endorsed back on each one, okay, and you can, if it's an LLC or corp or whatever, we endorse it back. I mean, all the buildings down by the University of Minnesota, they don't let anybody move in unless they have a 1-year paid up renter's policy.
Yep.
And they call me and they say, I need this, I need a binder sent over, and boom, I do. So the point is that that's really important to spread risk. And, a lot of lenders, yeah, I don't care. I don't do it. Well, okay, but do you want to be on the hook for all that money? Because you don't have to be. And when they have buddies over and they trip and fall, do you want their liability to pay for their stupidity because they left the vacuum cord out, they were too lazy to put away, and some drunken monkey tripped and fell and broke his hip? Or do you want to pay for it? So there's so many things to talk about that are little tweaks that will spread your risk and take the burden off of you landlords, that will help you far reaching into your future for your success, for owning and having more properties.
And, a renter's policy isn't that expensive, is it?
Oh, they're cheap.
Yeah.
Well, and it covers the client. If they have personal property in their car and their car is broken into and things are stolen, it's the renter's policy that pays on it, not the auto policy. It's the renter's policy. Wow. So I think people are confused by what covers what and how this all works. And then we, State Farm, we cover bully breeds. Most companies do not. They will not cover a bully breed. We insure
a what?
We insure people that own bully breed dogs.
Oh, so bully-free dogs.
Yeah, German Shepherds, Doberman Pinschers. So there's many bully breeds, and State Farm covers those. Others do not. State Farm also covers older structures built in the 1900s. And other companies will not. They refuse to insure properties that are older, and we cover them. LeAnn should know that from some of her older, really awesome properties she used to own. And so we take care of that. Other thing is we don't go to a finance company for monthly pay. We take the premium, split it by 12, and that's your monthly payment. You don't have to have a finance company finance the money. You pay interest on that. Plus, you pay an application fee down. I just saw one come across my desk yesterday. $200 was their application fee to insure it with an independent agent, a building, a business, on top of 26% finance fee over 9 months with a very large down payment to get the policy going. State Farm doesn't do business that way. We take the premium, $1,000 or $1,200, spread it over 12 months, $100 a month. That's what you pay, period. No finance fees, no application fees, none of that other stuff. So I think a lot of people don't realize all the hidden things that are going on and all the things you're being charged for that you're not paying attention to.
We don't. And when you get that policy in the mail, it's kind of thick. It's got a bunch of numbers we don't understand. Yeah. And if you don't have an insurance person, you can go ask. You're at the mercy of, okay, what's the bottom line?
Yeah.
Yeah.
Cost containment.
after my sister got hit by a car walking, that's when I realized, your car insurance counts for that too.
Sure does.
She wasn't even driving her car.
You slip and fall walking by your car, you grab the handle, and you slip and fall and break your leg, your car insurance pays. If you're riding in a friend's car and you're injured because they were driving stupid or you got T-boned, we go back to your auto policy first. That's considered no fault. It's nobody's fault you were injured. Once you max that out, then we go back after liability-wise under uninsured, underinsured, or however that works. But just really, really important to know what you got. And for pennies a day, get the proper coverage.
Definitely. Now, anybody else have any more questions? Put them in there. Now, this clue score, or there's a, like we all have a credit score.
Yep.
Then
So
there's
CRI. It's called CRI. Credit rating.
What's
so
that?
Basically how that works is your credit has a lot to do with your premium and what your premium costs are. So bankruptcies, slow pay, no pay, judgments, unlawfuls, things like that, whether it's auto insurance or fire policies, they'll pay more if you're not a good credit risk. That's the wave of the future today, unfortunately.
How about this forbearance? What if somebody takes forbearance? Is that going to make their insurance rates go up?
Yes, it will. Yeah,
wow.
Because it hits their credit and also hurts, yeah.
See, and nobody is mentioning that right now.
That means they're not financially responsible. So most people don't want people that are financially responsible. So they're going to pay more money.
That is totally, totally amazing. Okay, I want to share with you guys before we go. How the heck do you
I'll say one more thing if I can. I've seen a couple.
Yeah, you can talk while I share here.
Rental dwelling policies come to me from clients coming over to me, and they're HO1 policies. Basically, they're liability coverage with a little bit of structural coverage. They are horrible. Google HO1 home policies and see how horrible they are. But there are some very reputable insurance companies out there right now that are actually writing those on rental dwelling policies for people, landlords owning and renting out buildings, whether it's a duplex, a single family home, or whatever. They're not worth the paper they're written on, you guys. Beware, beware, beware. HO1s, HO3 policies. Depending on what kind of HO3 is it, and if it's not an endorsed policy back, another huge red flag. Be very, very careful. So, but that's crazy. All of a sudden, these HO1s are resurrecting themselves. I mean, these were policies that were invented back in the early 1900s, for crying out loud. They're horrible coverage. Barely any perils are covered, and it's going to hurt. It's going to hurt coming down the road. So, just kind of buyer beware is what I'm saying.
Wow. That's amazing, the HO1 thing. Can you guys see it here? I've got Kim's contact information up here. If you want to find her, right there's her phone number and how you can email her. Probably should take a little review here of your insurance. It's going to serve you in the end. You've got to have your butt covered.
Yeah, somebody had a question, LeAnn.
Can you?
Basement's leaking in our home. We live in an association. Will insurance cover that? Can we cut into the sheetrock before the insurance adjuster comes to look at it? Well, I mean, I'll speak for State Farm. I can't speak for other companies. So if you got a water leak and you need to know where it's at, and you take photos and you video what you're doing and why you're doing it, you're not doing total destruction, but just trying to find a leak. It's your job to secure the property and stop the water. Okay. So absolutely, I would tell you to do that. Just like if your shingles blew off your roof and it was torrential rain, can you go up and nail some tarp to your roof? Absolutely, 100%. You need to secure your property. Just take photos, take a video, and document. Now, if you're going to do full-on vandalism with a sledgehammer and that, now that may be not something that'll be covered. But if you're doing it to stop or prevent more damage, 100%, I recommend you do that. Absolutely, to find out where and what's happening.
And then they should have the conversation with the insurance person, just like you're saying, sort of figure out what it is, then call and have the conversation. You guys, you don't know how many times I called Kim and said, okay, here's what happened. which direction. And, you know, you take a look at the deductible and the result of, if you did have a policy and it's just a little bitty $1,200, $1,500, it never was worth it, the impact on the other side.
Correct. Remember, we want to insure for the catastrophic, not the inconvenient, you guys. It's really important. And people seem to always want to put inconvenient claims in. Those are the ones that are going to hurt you over time to the point where you won't be able to get insurance, or insurance is going to be really expensive. You're going to pay one way or the other. Just always keep that in mind. So it's for the catastrophic, not the inconvenience, and maintenance, wear and tear is your responsibility and not the insurance companies. So, and then make sure when you do have a catastrophic loss, you have the proper policy that does cover, and you're not going to hemorrhage financially out of pocket.
Look at, now that person says they check the association docs and we as owners are responsible for the foundation. That's interesting.
Yeah.
But this is the same guy who said that they knew when they bought it, a new foundation was in. So it's probably more of a warranty issue.
Now you got a liability warranty issue. Yeah. Because if they did foundational work, there's probably going to be well, in the state of Minnesota nowadays, I think it's like 10 years for a contractor has to warranty work done. It's not a little warranty anymore, or they can go after that person. So something's going on there, and he needs to dig into it, unfortunately.
Yeah. And I think I was involved in the sale of that one, and I remember it was disclosed.
Okay, so it was disclosed, so it becomes a warranty issue with whatever company did that.
Yeah. See how?
No, the insurance is not going to go after. It's not an insurance claim. Leaky basements aren't. So what you're going to have to do is you're going to have to go after. You got to get who the company was that performed the work, and you have to call them, and then you would put an insurance claim under their policy for products and completed operations. So their policy should have products and completed operations on it. And that's where if they're not going to come and fix it or don't want to fix it, I'd give them the opportunity first, which most companies that are reputable will. If they won't, then you'll file under their insurance company for products and completed operations for not doing the work properly and preventing the leak.
Wow. See, I mean, I love this right there. You know, we don't know these things, us average people, at all, but you do it every day. You know, right, who to call, what to do.
Yeah. Yeah.
That is a really, really good thing.
Yeah. Yeah. So that's what we are, as a resource to our customers. That's what we do every day. Call us, chat with us. I know that you've got a couple clients, LeAnn, that are, our clients too.
Yep.
And they utilize me all the time, and they call me weekends or evenings or whenever they need to, and we walk through things. And I want to be called, and I want to talk to somebody. I want to be a consult to people to help. Yeah. Definitely.
Okay. I'm going to wrap it up with one final thing. Did you get Kim's information? There it is. Right there. You can see it, right? And then one last thing I want to end with today is I also offer a free strategy session right here. If you want to talk real estate, not the insurance part, you're going to call Kim for that. But if you want to talk real estate, rent a property, or list, sell, buy, whatever, we're in COVID-19. There's going to be some deals out there, and you need to get ready. Then you better be thinking about it now, because there's already some deals, but there's going to be more. Free up your cash. Let's talk. So that's how you reach me.
Happy investing.
Yeah, that's right. There's good stuff out there, and there's some fix and flips coming up too. So just thanks for joining us, and I will see you next week when I interview another exciting expert. Thanks, Kim, so much for joining us and sharing all your knowledge.
Appreciate it.
Yep. All right.
Take care. Bye.
Bye.